All right, what's going on, y'all? Back with another video for the webinar. This video is for beginners who's looking to get into trading options or even futures. So we're basically just looking for chart patterns. Uh, that way we can see setups and possibly make money. If we take the right setup and we wait for confirmation and we're patient. All right. So let's go ahead and get into it. I'm not gonna waste too much of y'all time, man. Just want to show you guys some chart patterns that I found on Microsoft. This is the Microsoft chart on a 4-hour. You hit this drop down. You could just go to different time frames. The daily chart right here, 4-hour chart, 1-hour chart, all the way down to the 1-minute chart right here. But for the 4-hour chart, I picked that one so we can look for the setups. Give you guys examples of how you can find these chart patterns when you're looking to trade. All right, so first example, a bull flag pattern. So as you can see, it's shaped like a flag, and then we got the breakout. So we're looking for momentum upward, and then we're looking for consolidation inside these two support and resistance line slash trend lines. So this one, you mark them. You guys know exactly what I'm talking about. So we got Microsoft trading upward, and then between these two trend lines, this will be the support, and the green line will be the resistance. So we see us trading back and forth, back and forth. And now, because this is a bull flag, as you guys can see, we're looking for a breakout above this green line, and not just wicks, which is like these sticks on the top of these candles. Let me zoom in. These is a wicks. So you got this green body, and then you got a stick on top of it and on the bottom of it. Those are wicks. So you got the body of a candle and you got the wicks. The wicks is pretty much just showing you the shadow of the body. They're just telling you how high that candle went and how low that candle went. But the open and close is the body of the candle. All right. So we're looking for a solid body to trade above this green resistance level before we look to take a trade. So once we broke above this green resistance level, this candle right here traded back down, tapped in on this resistance level again, and then it wick up, right? And it closed green. That is a bullish hammer, which is very bullish. So I wouldn't get in on this trade. Sorry, y'all, that's my son. Right? All right, so I wouldn't get in on this trade at this candle, but I will wait for confirmation at this candle. See how it came down, touched this line, and then bounced back up. So that would be a perfect entry right here. You can get in right here, but this would be a perfect entry. And as you see, Microsoft went right up from 409 all the way up to 441. If you was to take an options trade on that, you would make good money, man. And that's from, let's see how many days that would have been. Let that cook for about 6 days. You would have made good money on that trade. And that's a bull flag pennant. Now I can show you guys examples on here. Let's see. Here we go. Here go one. Bullish flag. As you can see, it goes up, trades sideways, and then breaks out. That's a bullish flag. And this right here is a trading chart patterns cheat sheet. So you guys can, I'll drop this in the Discord. That way y'all can have this saved and you can look at this cheat sheet and then look at the chart and see if you guys see these patterns. So this is a bullish flag. Now we're going to look for the bearish flag setup. It trades down, consolidates, and then it break out to go even lower. Let's go back to the Microsoft chart. Zoom out. Sorry, y'all, man. I'm in a car. Take care of some business, but I said, you know what? Let me try to make a quick video for you guys real quick. All right, perfect. Here's a bear flag pennant. We traded downward, and then between these two trend lines, support and resistance, we traded sideways. Once we broke out, we want to wait for confirmation. We didn't get a candle to come back and test this line. It just kept dropping. So, but we also got this candle right here, a solid red candle. It broke through the heavy, and then it followed with this candle right here. All right, so that would have been a good trade. Although we didn't get a confirmation to test this trend line, that still would have been a good trade because the next candle is a inverse hammer, which is bearish. You see, we traded all the way down back to this support level down here, and then it went right back up. So this would have been a good trade to short Microsoft once it broke this trend line, and that's a bear flag pennant. Let's go back to the cheat sheet. See the cheat sheet? We trade downward, we consolidated, and then once we broke out, it was over from there. Same right here. We traded downward, consolidated, and we broke out. So you can find a lot of these setups on these charts. You just got to know what you're looking for. All right, here's a double bottom. I did a video about this too. All right, so this is a double bottom. Come over here. Let's see what I can use. Not that one. Let's try this one. This is double bottom. We trade down to this level, then it spiked up, but then we come right back down to that level again before taking back off. This is a bullish setup. All right, that's called a double bottom. We went downward, traded up, came back down just to test this level, and then we took off. All right, let's go back to the cheat sheet. See if we have a double bottom on this cheat sheet. There we go. There go a double bottom. Double bottom. That's a reversal pattern. That means if we're going down and we see this double bottom happen, the market is going to reverse to the upside. And that's exactly what it did. Came here, tapped, went back up, came back down, tapped twice, and then it took off to the upside. That's a double bottom. All right, let's see. Here's another bull flag. Went upward, traded into this consolidation, then broke out. It was short-lived. As you can see, it turned around and headed back downward before taking back off. Kind of made a double bottom. I wouldn't count that. But let's see what else we got. Here's another double bottom. Look at that. Followed by also a double top. All right. Came down, hit that level, came back up, came back down, hit that level. This is an entry. We can get in an entry on this right here. Whether you want to buy this long term, well, I wouldn't say long term because you want to look at a further. If I'm long term, I'm looking at a daily chart, monthly chart, weekly chart. If I see something like this on a weekly chart, that would be for me to buy a whole long term. But this is pretty much for day trading, swing trading. More likely swing trading. You want to buy one day and sell a couple days, few days out. All right. So again, this is a double bottom. We traded downward, went up, came back down to that level, and took right back off. But also, it was followed by a double top. We hit this level one time, came down. What we do? Come back up and hit this level again. So guess what? You traded back down. This would be a good position to short. This would be a good position to buy, call, go long. All right. Let's go to the chart patterns to see the double top. The double top is a reversal. We going upward. We hit this level once, came down, hit this level twice, and now the market is reversing to the downside. All right, let's see what else we got. All right. So we looking further out. We zoomed out. Look what we got here. First of all, let me go. First off, let's go to the cheat sheet. Let's see if we have a head and shoulders. Here go right here. Head and shoulders pattern. That's a reversal pattern to the downside. We went up. We have that one would be a shoulder. That three would be a head. That five will be the other shoulder. And then once we made the other shoulder and we break this line right here, this green line, we call that the neckline. Once we break that, we're going bearish. We reversing. So if we was going upward and we created this pattern, you can look for the market to go downward. All right. So we traded up, made this shoulder right here, traded down, and then we went all the way up, made this head. This is a head. This would be considered a head. We traded down, right? Went back up, made another shoulder. Now, when I was saying neckline, this would be the neckline. That's the neckline. This is the shoulder. Just think of it like a body, right? You got your shoulder here, your head, and you got your left shoulder, your head, and your right shoulder. Once we break this neckline, because this will be your neck, right? A neckline is pretty much where we see support. We see support at this level. Once we break this level, you can see it's over with. It's reversing. It's reversing to the downside. And look, went from here all the way down here. But we want to buy once we break this neckline. That's when we want to buy on a trade. You can buy up here, but this will be gambling because we haven't fully made this shoulder to show us that it's a head and shoulders pattern. Let me take this off. All right. And it's not the cleanest head and shoulder pattern, but if you really look at it, you see it. You got the left shoulder, head, right shoulder. Once we break this level, we want to look to enter, and then we look to take profits. All right. Quick video of chart patterns, man. Quick video. Here's another one right here. Let's do this last one right here. This is a ascending triangle. We have, let me zoom in on this. So we have a resistance level, support level. We got two trend lines where it's trading, consolidating in between, and then it broke out. We want to look for the breakout. That's when we want to enter the trade on the breakout. We want to look for a breakout, possibly test this line before going higher. Look at that. That would have been a good trade. You can get in right here and get out right there. Great trade. Great trade right there. That would have been a great trade. That's ascending triangle. Ascending triangle makes higher lows and lower highs. Then it breaks out of consolidation. Consolidation is when candles are just trading sideways. It's just up and down, up and down, up and down. That is a low. We got a higher low. We got another higher low. All right. That just means this price is higher than this low. This price is higher than that low. This is a high. We have a high, a lower high, a lower high, so that creates a ascending triangle. And then once it breaks out this way or that way, we can see where the market is going. If it broke out this way, we can see it coming down here somewhere, look for support. If it break out this way, we can see it trade up here to look for resistance. If there's some over here, there's no resistance over here. So it's just running higher and higher. Actually, let's zoom out. Let's see. Yeah, it's been running higher and higher. Haven't even came back down to this level so far. Nope. There we go, man. Quick video about chart patterns, man. Like I say, I'm gonna drop this this cheat sheet in the Discord. You guys can study this, go back to the charts, and look for these patterns.